Welcome to this explainer. We're jumping right into a hidden crisis that is quietly threatening California's golden facade. You know, when we think of threats to the Golden State, our minds usually jump straight to earthquakes, devastating droughts, or maybe a sudden economic recession. But there's something else unfolding right now, something a lot quieter and honestly far less traumatic on the surface, yet it's totally capable of destroying entire communities from the inside out. We're looking at a fundamental breakdown in the very system designed to protect people when the worst actually happens.
Because from the outside, California still looks absolutely unstoppable, right? It's the fourth largest economy in the entire world. Silicon Valley is churning out billion-dollar companies, Hollywood dominates global entertainment, and luxury real estate is selling for millions. But beneath that glittering image of endless prosperity, a pretty devastating reality is taking shape. Ordinary families are opening their mailboxes only to find out that the financial safety nets they've depended on for decades are just quietly being canceled. Major insurance companies are literally walking away.
And that brings us to the central mystery we're unpacking today. The businesses leaving the state, they aren't doing it out of some sudden greed. Their entire industry is built on calculating risk. So, if the world's absolute top risk analysts are deciding that writing policies in California is no longer a risk worth taking, we have to ask this terrifying question. What do they know that millions of everyday homeowners do not?
Okay, let's dive into this. Part 1. The silent financial collapse.
To solve this mystery, we first have to figure out where this disaster is actually taking place. And it's not happening in the boardrooms of Wall Street, and it's not happening in the halls of government. It's happening right here, on quiet suburban streets. For decades, Californians relied on a very simple promise. You pay your premiums every single month, and if the absolute worst day of your life ever arrives, someone will be there to help you rebuild. That was the deal. But today, families are getting letters saying their coverage is ending, or they're discovering that no private company is willing to insure their home at any price. The basic foundation of disaster protection is just vanishing into thin air.
Which brings us to part 2. How insurance actually works. To truly grasp why this promise is evaporating, we kind of need to strip away our assumptions and demystify the industry itself. Most of us think insurance companies make their money simply because disasters are rare, but that's not exactly true. Insurance is not some magic shield. It is, at its core, a strict mathematical prediction. It relies on a very specific assumption that tomorrow will look reasonably similar to yesterday. Insurers are experts at looking at historical data and turning that uncertainty into reliable numbers.
What's actually super interesting is how simple this century-old business model is when you break it down. Millions of customers pay premiums into a giant pool of money. The company then uses that pool to pay out a relatively small, highly predictable number of claims each year. Fires happen, floods happen, storms happen. But historically, they happen at predictable frequencies. As long as the money going into the pool is greater than the money going out, the business survives and thrives.
But here is the stark reality that's completely turning the industry upside down right now. That foundational assumption that the future will mirror the past is breaking apart. California is changing much, much faster than the insurance industry's historical models can possibly adapt to.
Part 3. When the math breaks. Let's look at the climate reality for a second and see how this builds into a systemic crisis. When historical data fails, the entire mathematical foundation of insurance collapses right along with it. We aren't just dealing with a slight increase in risk here. Wildfires that used to be considered once-in-a-generation disasters are now happening annually. We've seen entire towns vanish in a matter of hours. The fire seasons are longer, hotter, and far more destructive than anything historical data ever predicted. Every single year brings a new record. The biggest fire, the fastest moving fire, the most expensive disaster. When records fall constantly, the past becomes totally useless for predicting the future. And all that unpredictability carries a staggering financial cost. For a long time, insurers tried to just absorb the damage by raising prices or demanding stricter building requirements. But the disasters kept outpacing the price hikes. What used to be billions of dollars in claims rapidly escalated to tens of billions. Insurers woke up to find that several years of hard-earned profits could be completely wiped out in a single catastrophic wildfire season. The math simply stopped making sense. Every new policy carried the threat of an uncalculated, massive loss.
Part 4. The uninsured reality. So what exactly happens when the math stops making sense? Well, we enter the uninsured reality, and we shift our focus from the industry's balance sheets to the absolute shock that real homeowners are facing right now. The crucial point to remember here is this. Insurance is a private business. It is not a public utility. We often treat it like electricity or water because a mortgage company requires it and banks demand it. But private insurers are not legally required to insure your home. If the risk becomes too great and the math doesn't work, these businesses can and absolutely will simply pack up and leave.
And this creates a deeply frustrating and honestly almost unreal situation for homeowners. These are families who did everything exactly right. They paid their premiums on time for decades. They maintained their properties, cleared the brush around their homes, and filed few, if any, claims. Yet totally without warning, they're getting non-renewal notices in the mail. They're suddenly thrust into a shrinking market where literally nobody is willing to take on the risk of protecting their home.
Part 5. The economic domino effect.
If we zoom out from the individual homeowner, we start to see a really terrifying macroeconomic fallout. Because this isn't just about one house burning down, it's about an economic domino effect. Most people naturally assume that the biggest danger is the physical fire itself, the immediate physical destruction. But the true financial disaster often actually begins after the fire is put out. Think about it. If you don't have insurance, rebuilding is nearly impossible. You still have to pay the mortgage on a house that no longer exists, while simultaneously paying for temporary housing and dealing with constantly rising construction costs. Without insurance, an entire lifetime of savings can disappear in a matter of months.
This sets off a terrifying financial cycle. Step 1. Insurance becomes unavailable or totally unaffordable. Step 2. Because there's no insurance, rebuilding is impossible and mortgages begin to fail. Step 3. All this uncertainty causes property values to tank. And finally, Step 4. We see a massive economic decline across the entire community. Yes, the physical fire is devastating for sure, but it's actually the financial vacuum left behind that permanently destroys a town. And the crisis spreads way beyond the immediately impacted neighborhoods. It threatens banks, real estate markets, local governments, and small businesses. Because once insurance is gone, buyers become hesitant, mortgage approvals completely stall out, and outside investment just slows to a crawl. Financial uncertainty acts exactly like a virus, spreading through the economy and depressing property values statewide, long before any physical disaster ever strikes. Which leaves us with this final, chilling thought. The companies walking away from California employ the most sophisticated climate scientists, engineers, and catastrophe modelers on the planet. Their entire existence depends on accurately predicting disasters before they happen. And insurance companies rarely walk away from millions of paying customers unless they truly believe the future is becoming significantly more dangerous than the past. So, when the world's top risk experts quietly pull their money out of your state, what does it mean for your future? Think about that. Thanks for joining me for this explainer, and keep questioning the world around you.